Welcome back to Investing Talk Podcast. Today, we're doing a deep dive into SoundHound AI. We've gathered a stack of recent reports, analyses, looking at their financials, their business, how the stock's been doing up to late May 2025. Our goal here is really to cut through it all, pull out the most important stuff, and kind of piece together what the picture looks like for you right now.
And it's an interesting one. This company really shows some, let's say, contrasts. You've got this incredibly fast growth happening right alongside some questions about their, financial health metrics.
Yeah.
It's a great example of just how complex it can be to value these fast-moving tech companies.
Okay, let's get into it then. Maybe start with the numbers.
Yeah.
Because that's where some really dramatic points seem to pop out from these sources, like their reported revenue for 2025. The reports show it landed around $169.49 million.
That's the figure. And it's a huge leap, about 100.12% up from the year before. Just massive growth.
Wow.
And what's striking is how consistent that acceleration has been. I mean, if you look back, revenue went from, $31.13 million in 2022 up to that $169.49 million in 2025. That's a compound annual growth rate consistently over 100% during that time. That's definitely grabbing attention.
And the latest data point, Q1 2025, that kept the momentum going.
It did. Revenue for that quarter was $29.1 million. That's a 151% jump year over year just for Q1. And the company seems confident they've reaffirmed their full-year guidance, expecting between $157 and $177 million.
Okay, but that's top-line growth. It's impressive, no doubt. But growth is one thing. What about making money? Profitability? What did the sources say there?
Well, this is where it gets complicated. Based on standard accounting, GAAP, the sources state SoundHound AI isn't operationally profitable. Their GAAP EPS is negative. Now, they did report a GAAP net income in Q1 2025, $129.9 million or some 0.31 per share.
Oh, okay.
But, and this is important, the report suggests this was heavily influenced by some one-time items. They really emphasize the non-GAAP net loss as maybe a clearer picture of ongoing operations.
What was that figure?
For Q1, the non-GAAP loss was $22.3 million. And if you look at the trailing 12 months, the TTM figure, that non-GAAP loss is around $188.52 million. TTM EPS is about negative $2.52.
So that headline GAAP profit number needs some context.
It appears so. The underlying non-GAAP numbers show significant operational losses are still happening.
Which means, of course, they don't have a standard price-to-earnings ratio, a PE, because the E is negative.
Correct. And in situations like this, the reports often point investors towards the price-to-sales ratio, the PS. It gives you a way to value the company based on its revenue, especially when profit is, still down the road.
And the thinking is, if they hit those revenue targets, the PS ratio should come down.
That's generally the expectation, assuming the stock price doesn't drastically outpace revenue growth.
Okay, beyond revenue and losses, any other financial vital signs? Cash. Debt.
Yes. This is actually a point of strength highlighted in the Q1 reports. They finished the quarter with a pretty healthy cash balance, $246 million.
Okay, that's substantial.
And importantly, no debt on the books at that point. That cash buffer gives them some breathing room, some runway to keep funding the growth and covering those operational losses we talked about.
What about things like free cash flow or return on equity? Any mention?
The sources we looked at didn't really go deep into historical free cash flow. And return on equity, it's negative because they're not profitable.
Makes sense.
Those metrics, FCF and ROE, they'll become a lot more relevant if or when the company achieves its stated goal. They're aiming for adjusted EBITDA profitability by the end of 2025.
Right.
The reports do suggest consulting the company's own filings for more granular details on things like debt to equity or specific FCF trends.
Okay, so let's recap the financials. Really explosive revenue growth. A good cash position with zero debt as of Q1, but still burning through cash on operations, significant losses.
That sums it up pretty well.
So that naturally leads us to the business itself. What exactly is SoundHound AI doing? What's their product, their angle in the market?
At its core, SoundHound AI offers independent voice artificial intelligence solutions. Think of them as enabling other businesses, companies in automotive, TV, IoT, customer service, to build their own really good conversational AI experiences.
So they provide the AI engine for others.
Basically, yes.
Yeah.
Crucially, it's independent, meaning it's not tied into, say, the Amazon or Google ecosystem directly.
Can you give examples of their tech? What products are mentioned?
The Houndify platform comes up a lot. It's essentially their toolkit for developers, APIs, tools, the building blocks needed to create custom voice assistants.
Okay.
And more recently, they launched Amelia 7.0. This is described as a next-generation agentic AI platform.
Agentic AI, what does that mean?
It suggests the AI can do more complex things, act more autonomously. It uses advanced speech recognition, natural language understanding. They mention their Agentic Plus framework and provides analytics, too.
Now, you mentioned Amazon, Google. This space has giants.
Yeah.
What do the sources say is SoundHound's edge? How do they compete?
It seems to come down to two things. There's specific AI technology, particularly voice recognition, which is described as having really good speed and accuracy, and that independent positioning. While they are competing with the big players by offering solutions that aren't tied to a specific ecosystem, they appeal to companies that want that voice AI capability, but also want control over data, user experience, and don't want to rely on a potential competitor's platform.
Especially in certain industries, maybe?
That's what the reports suggest. Particularly automotive and IoT are mentioned as sectors where this independence is a key advantage.
Are they landing big partnerships? Working with well-known companies?
Yes, the sources highlight expanded collaborations. They mention deals with major restaurant chains and key automotive partners like Tencent, Intelligent Mobility, and NVIDIA.
Okay, those are significant names.
And another point noted is customer diversification. Apparently, no single customer makes up more than 10% of their revenue. That's good for reducing risk. They're not overly reliant on one big contract.
All right, so for the business, innovative tech, specific platforms like Houndify and Amelia, securing strong partnerships, and carving out that niche as the independent voice AI provider.
That seems to be the picture painted by the sources.
Okay, that covers the business and the financials. How has the market, the stock itself, reacted to all this? What have the recent movements looked like?
Well, it's been volatile, definitely a ride. In late May 2025, the sources had it trading somewhere between roughly $9.27 and $9.73.
And historically?
Looking back, 2024 was pretty wild. The stock surged over 750% that year. But 2025 has brought more challenges, more swings, including a notable sell-off earlier in the year, partly linked to just broader market trends affecting tech.
What about analysts? What's the general feeling there according to these reports?
Generally, the analysts covering it seem to lean towards a buy rating. The average price target mentioned is around $10.83, which suggests some optimism about future potential. But the reports also acknowledge that the stock's volatility and those ongoing losses we discussed. They definitely raise concerns for some investors. Analysts are flagging risks like potentially escalating losses if spending continues, and they also note details about insider selling activity.
Did that strong Q1 revenue number give the stock a boost at the time?
It seems likely yes. Beating revenue expectations like that probably contributed to some positive momentum after the report came out.
But the losses tempered that enthusiasm.
It seems that way. The continued non-GAAP losses, even with that one-off GAAP profit headline, appear to be acting as a check on longer-term investor excitement, perhaps contributing to that ongoing volatility.
Okay, looking forward then. What are the main risks and opportunities that these sources are highlighting for SoundHound AI?
On the risk side, number one is definitely the intense competition. You've got the established tech giants, plus a whole wave of AI startups. It's a crowded field.
Right.
Regulatory issues are also mentioned, things around data privacy. The rules governing AI technology are still evolving. That creates uncertainty.
And the big one we keep coming back to.
Achieving profitability. That remains a major hurdle. Plus, as we just discussed, the stock's own volatility is a risk factor for investors. Oh, and there was one other specific point, a near-term thing. The sources mentioned a deadline, May 27th, related to a securities class action lawsuit. That could potentially add some short-term noise or volatility depending on how it plays out.
Okay, so significant risks. What about the upside, the opportunities?
The big opportunity lies in continued expansion. Moving deeper into verticals like automotive, hospitality, other areas, especially if they keep landing those strategic partnerships. Strong execution is key there.
And the market itself.
The whole field of conversational AI is growing rapidly.
Yeah.
Advances in natural language processing, the general demand for these kinds of solutions, those are positive industry trends that SoundHound AI is positioned to potentially benefit from.
So, summing it up,
Mm-hmm.
huge growth potential, exciting market, but facing fierce competition, regulatory hurdles, the need to turn profitable, and even this legal overhang.
It's definitely a mix.
We've covered a lot. The incredible revenue surge, the operational losses despite that Q1 gap number, the decent cash position, their unique independent tech strategy and partnerships, the competitive battleground, and the stock's bumpy ride.
And pulling together the overall sentiment from the sources, it often lands on a cautious note. You see recommendations like Hold mentioned. There's an acknowledgement of the company's clear strengths, the innovation, the growth ambition, but the financial challenges, the stock volatility, they weren't close watching. Upcoming earnings reports, broader AI market news, those are the key things anyone following this company needs to keep an eye on.
So here's a thought to leave you with. We see this pattern, rapid top-line growth, really driven by innovation and partnerships. But it's set against these persistent operational losses and big external risks, like competition and potential legal issues. What does this picture tell you about the fundamental trade-offs investors have to weigh up when they're looking at these cutting-edge tech companies, the ones prioritizing market share and development over profit today? That wraps up our deep dive into the sources on SoundHound AI for today. We really hope this helped you get a clearer picture of what's happening with the company based on the reports we had available. If you did find this valuable, please do take a moment to subscribe so you don't miss future deep dives. And liking and commenting that really helps other people find this information too.
Thanks for tuning in.
Thanks for joining us.